Good afternoon, everyone. I'm recording this just before the American Open, 2:15 p.m. UK time on Tuesday the 29th of September to make my deadline for the views, which you should be getting this on Saturday the 3rd of October. And in this very short video, I just want to talk about market timing. Anybody that's listened to any of my talks before will know that I firmly believe that 70% of the exercise is working out whether the market is rising or falling, and as Dr. DeLito says, everything follows from that. So we have a very interesting situation on VectorVest UK, and that's what we're looking at. So this is after the close on Monday the 28th of September, a very good day for the UK market. And the two most important words, folks, are up, down. And the first word, up, refers to the primary wave or the short-term trend of the London stock market. And the second word refers to the underlying trend of the London stock market. So the short-term trend is up, longer-term trend is down. And if we it's just turned up. In fact, yesterday, the previous day, Friday night's close was a down situation. So we've got the primary wave has turned up, and that's my first measure that the trend has reversed. It's a very aggressive measure. The second measure is a green light on the front page on the price column of VectorVest, and that green light tells us that the VectorVest composite is up day over day and week over week. That's my second measure, and if you read the essay, I talk you through that. The third measure that the trend has changed would be a black star in the green light, and that hasn't occurred yet. That would tell us that the price of the composite is rising, and momentum as measured by two moving averages on the RT of the composite is also rising. We haven't got that yet. So today, and this will have changed a lot by the time you get this on Saturday morning, today the first two measures of a reversal have occurred. So the next one, as I say, would be the black star in here, and then the one after that is called the DEW, and I've defined that exactly, I think, in the essay, and it's not on the front page of VectorVest, and the objective of this little video is to show you where to find it, those of you that are new. So to find it, we go to timing, and then just click on market timing graph, and this will pull up the VectorVest composite of the UK, which is an equally weighted index of all of the shares that we follow on the London market and on AIM. To get to the DEW, go to Graph Layouts and just click on ProTrader DEW, and it's going to load this for you. And that's the composite, and we have I always make this red so we can see it a bit easier. A 30-day weighted moving average on the composite. The detrended price oscillator, which runs through a center line of 0, and some bands. Now these bands, in fact, have only come into practice, I think, twice in the last 10 years. So at the outset, I'm going to take the bands off so we can get the basic signal. Now here we have a drop down, and in that drop down we've got all the VectorVest market timing signals. The primary wave that turned up yesterday, the green light buy, which also turned up yesterday, the green light buy with the black star, which is known as the RT kicker, which hasn't turned up as yet. And we can apply these, but if I click here on DEW, it'll populate the DEW signals. And very simply, folks, that when the DPO is less than 0, it's center line, and the market closes below the moving average, it prints a sell signal. And the last signal is in fact a sell signal because the DPO was less than 0 and the market closed below the moving average. Now, the technique is exceptionally good coming off a major bottom. So if you see a really big sell-off in the market, then the DEW, the first DEW signal, makes a great entry after that sell-off, a great confirmation. And that's in fact the signal that I used during this campaign, which I've been speaking to everybody that'll listen to me about since April. So this could turn up quite easily now, and if we had a good day today, we could close above the moving average, and we could in fact, the DPO could be above zero. When a market goes sideways like this, then any technique that's in fact made up of moving averages gets whipped, but that's a very simple technique. So the first signal of a turn is the primary wave, the second signal is a green light, the third signal is in fact a green light with a black star in it, and the fourth signal is the DEW. So we've, as I speak, just before the American Open on Tuesday, the 29th of September, the first two signals are still firing. So let's look at the envelopes just for a second. If I put on the envelopes, if I just click the envelope, there is a special condition that doesn't happen that often. And when the market trades and closes below the lower envelope, then it only takes one of these signals to give a buy. And if you look very carefully, after this huge sell-off that we had in February and March, the composite closed above the moving average, but in fact the DPO in fact only crossed above its center line about here, which was about a week ahead of the signal. So when it trades outside the band, then we only need one of those two signals to give us a DEW buy. You don't have to worry your pretty little heads about it, because the software does that automatically. If the software sees that it's traded below the band, then it will in fact print a signal when one of the two criteria are met. To my best knowledge, that's only happened in the sell-off in 2008 and the sell-off that we had at the start of this year, the so-called COVID sell-off. Let's hope that's well done and dusted. So now, if we go back to the front page, there is something that is quite difficult to get your head around, because although the short-term trend was down and the underlying trend was down, we still had a confirmed up. And that's because the underlying trend, ladies and gentlemen, had not turned down long enough in the last upswing to actually give us a confirmed down. Just remember, for a confirmed down, the market has to confirm the underlying trend by 2 5-day periods of price action. So the confirmed up signal has not changed since the 24th of April, and that's why we use that long-term signal that ignores a lot of the noise for our worry-free trading plan. So let's go through the signals again, and please get very comfortable with these signals. They are money in the bank. I was taught these by John Graham, our user group leader in Guildford, very first evening I met him in the church hall in Godalming. The first signal is the primary wave turns up. Okay. The second signal is a green light, which says that the price is up day over day and week over week. The third signal is a green light with a black star. The fourth signal is the DEW. The fifth signal is the underlying trend, and the underlying trend, folks, as soon as that MTI moves above 1, the underlying trend will change to up. And then the fifth signal, which is very free of noise, is the underlying trend confirmed by 2 weeks price action. And as I say, in the last sell-off where the underlying trend went down below, where the MTI went down below 1, it wasn't down there long enough to actually trigger a confirmed down. So the confirm signals ignore a great deal of the noise. I hope I haven't made that too complicated for you, and I'll answer any questions on it on Monday afternoon. Thanks very much indeed. Bye.